So the housing market downturn, it's here to stay, and I think we all need to accept that and move along. So welcome to Housing Bubble 2.0 News of the Week, or as I like to call it, another episode of As the Housing Market Turns, or Burns, or Crashes, or does whatever. Randy Patrick here, putting the realism back in real estate. Today is the 19th of September. Hope everyone had a great weekend, and this video is brought to you by our friends at foreclosure.com. So if you want to check out the distressed properties in your neighborhood, in your backyard, go to gethousingdata.com. That's gethousingdata.com. That's my affiliate link. You can you can see the stuff I talk about right, as I said, right in your own zip code, your backyard, your neighborhood, whatever. So again, gethousingdata.com. You should check it out. So the really cool thing about this housing market is now, it's like every other day we're seeing discussion on downturn, correction, crash, how much, how far it's going to go, blah, blah, blah. So gone are the days when we had everything's going to be hunky-dory, everything is awesome, double-digit appreciation. Now we're right in the throes as to watching this happen in real time. So this was an interesting article that was in Forbes. It says, we're entering the next stage of the housing market downturn. 3 things to expect heading forward. So it kicks it off with, back in June, Fed Chairman Jerome Powell made it clear the housing market would go through a reset. So very important to note this. And this is exactly his quote. It says, I'd say if you are a home buyer, somebody or a young person looking to buy a home, you need a bit of a reset. We need to get back to a place where supply and demand are back together and where inflation is down low again and mortgage rates are low again. That's what Powell told reporters back in June of this year. So again, a little bit of a reset, right? Interesting. So fast forward to where we are in September now, and basically we no longer need to ask the question if the housing reset will affect home prices. Basically, it is affecting home prices, okay? As data rolls in, we now have clear evidence that the housing market downturn has moved beyond that first stage, which is the sharp drop in housing activity, to the second stage, which is falling home prices. So pretty interesting to see that we are progressing, and we're progressing in a relatively short amount of time. The longer that mortgage rates stay elevated, our view is that the housing is going to continue to feel it, and it will have this reset mode. Basically, there are a lot of markets across the country we're forecasting that home prices are going to fall double digits, said the guy who's head of research at John Burns Real Estate Consulting. So, as I always mention, I listen to a lot of information. I listen to a ton of it, and I like to kind of formulate my thoughts and opinions and where I think the market's going to go. And ultimately, in the end, we've had a delay for a couple of years for obvious reasons, right? Pandemic. But now we're kind of coming out of that right now. We're done it. And we're actually seeing that this real-time reset happening. It boils down to one very, very simple, we'll call it, I guess, piece of information or facts, is the fact, the Federal Reserve said we have to reset. They're going to reset the housing market, which to me means they're going to crash it to bring things down to palatable levels for everybody, so we can all buy properties and enjoy and get a balanced market, et cetera, et cetera. So, this is more and more people are talking about this. So here's kind of the 3 things. Number 1, home price correction is spreading. So a couple of videos ago, I had this on the screen about the 98 markets where home prices were already falling. There's 210 markets that are now at risk. So basically, it's clear that the housing bulls got it wrong. Gotta love that. Gotta love when I hear that, because again, we were always referred to as housing bubble bros by various journalists and writers that I don't even talk about, and I don't even reference their websites anymore, even put it up. So basically, among the 148 regional housing markets tracked by John Burns Real Estate Consulting, 98 housing markets have seen home values fall from their peaks. Just 50 markets remain at their peak. Guess what? Those will come down at some point as well. So again, home price correction is spreading. It's not just in one market. It's moving its way across the majority of the markets. 2, the housing downturn will soon spread beyond housing. So they're basically saying that the housing market recession, we're having it right now in 2022. It's going to carry over to 2023, which we know. Essentially, existing home sales have fallen by 20%. New home sales by almost 30%. Locations or groups, organizations like Redfin, Compass, Realtor.com have already issued layoffs. Home builders are calling off projects, while some mortgage lenders are teetering on bankruptcy. Throughout the past number of months since the rates were going up, we've always Every day, every other day, we read about mortgage companies going under, bankrupt, as they said, or laying off, hundreds or thousands of employees. So guess what? This is not just, as they say, it carries over to other things now. Most of the financial pain of the housing downturn has been contained within the real estate industry, and that's about to change. That's right, because when you take a look at all the things that are involved with buying and selling new construction homes or existing homes, it permeates throughout the economy. Real estate is a huge part of our GDP. So that's going to, if that's going to be affected, it's going to affect people from different levels, different facets of life, etc. So sellers are calling a timeout. As the pandemic housing boom fizzled out this summer, we saw inventory jump across the country. In bubbly markets like Austin and Boise, the inventory jump was greater than 300% between March and August. So what this really means is that, hey, put your property on the market now and try to catch that last few months or weeks of huge price uptick so you can cash out and do whatever you need to do. But that inventory spike is already fizzling out, and you can take that, people are putting their homes in the market, but in the end, they could pull them off because no sales. Why keep it on the market? So interesting to see that sellers are actually, like, buyers already hit the wall. Buyers already have buyer fatigue and are pulling back and are canceling contracts and are putting in lower offers and are not engaging in bidding wars. So all those things are happening now. As a seller, if you're a home seller and you want to still catch the wave before it starts to really go down exponentially, you want to get rid of your house now. You're going to have to reduce price. You're going to have to be competitive. You may have to address and add some concessions in there. And the reason being, every time rates go up, the affordability of the average buyer goes down. Rates just peaked 6% at the end of last week. So I think it was the first time in how long we actually hit an average over 6%. That will have a dramatic effect on what's going to happen in the marketplace. And guess what? I believe this week we're going to have another, we'll call the Fed's going to probably raise the, interest rates again by, they're saying, minimum 75 basis points, if not 100. So that'll probably affect mortgage rates as well too. What's going on? For starters, sellers are realizing that buyers they've stopped paying top dollar. They won't do it. Rather than take less, some sellers are going to wait out the downturn. There's also the rate lock effect. So this is interesting. All right. The vast majority of outstanding mortgages have rates below 5%. So essentially, if you have a rate below 5%, you're not hurting on your mortgage payment, with a big chunk even below 3%. So if you sell now and you have to move someplace else and get a mortgage, you're going from a low threes, high twos to what? Up to high 5, 6s now, right? So that's the point, is that, if you sell and cash out, what's your buying power at? Is it's diminished by rates, etc. So that equity that you pulled out maybe isn't going to be, put to good use, etc. So we'll have to see. But again, just interesting to see how, there's more than one sort of aspect to housing that plays in the marketplace. As I've always mentioned, it's not just one thing that pushes the housing market over the edge. It's a combination of a lot of moving parts and scenarios that kind of can push us over into that sort of crash territory. So very interesting to see what's going on there. Oh, and by the way, if you're not a subscriber to my channel and you appreciate the information I provide, if you could please subscribe, I'd appreciate that. Also, if you are a subscriber, if you could do me a favor, check your subscription, get the notifications on, because I lose subscribers every day. So again, thank everybody for the views. All right, guys, moving on here. Clearly, this is a second article, but it was actually before the article I talked about. These are from Fortune magazine. The U.S. housing market downturns will be worse in 2023, forecast Goldman Sachs. So that's the sort of same, I guess you could say, bar graph there for forecasting the lower market, a slower, almost 10% decrease market next couple of years. And I do find that interesting. So they're already talking about this, and we're seeing the manifestation of metros now having issues. Clearly, U.S. home building is slowing. It's slowing fast. Its seasonal annual adjusted rates dropping. It's got 10, as of the last, we'll call it a statistical count, there was 10.9 months worth of, I guess you could say, worth of inventory on the new home side. If you do some, we'll call recession tracking or housing crash tracking, we find that, or it's been noted that whenever new home construction has a greater than 10-month supply of new homes, that's followed by a housing crash. So there you go. So we've got history on our side to sort of predict what's going to happen in the end. Past housing downturns have typically been accompanied by economy-wide recessions, which led to an influx of housing supply as unemployment rose, individuals were forced to sell their homes. This is especially the case in the financial crisis. However, an influx of supply from this channel seems unlikely in this cycle. The labor market remains robust, and as we wrote last week, household balance sheets are extremely strong and loan delinquency rates are likely to remain historically low. Thereafter, we expect home prices to be flat in 2023. So I want to point something out here. So number one, when you have Moody's, Goldman Sachs, and Fitch Ratings all coming out saying home price declines, deceleration. We're in the crash mode now here. To me, that's again interesting more than not. One of the things that we talk about that they're not including one aspect we'll get to in a second here. So if I go back to history, I put this up the other day. January, first part of this year, everyone's talking double-digit home price appreciation. That's where we're going. Nobody in their mind, at least from a housing narrative media perspective, mainstream here, was talking about any sort of correction that we're happening right now. Well, we had an underwhelming summer selling season, really, with respect to because of interest rates. So interest rates rose. As we said in June, the Fed says we're going to correct or reset the housing market, and it's actually happening. So where do we go from there? Well, more listings, price reductions, fewer bidding wars, even contract cancellations for various reasons. When you put your offer in, if you were at 3 or 4%, and now you're at high 5s or 6s based on timing and interest rates, well, guess what? Maybe you don't qualify anymore. Simple as that. You get out of your contract. So very interesting. But again, going back down to June 21st, when the Fed said we're going to reset the housing market, take that for what it is. I personally think that if they're going to reset the housing market, they're doing it, and you know what? They already sort of set us up for failure prior to them calling the reset. So, we're just going to have to sort of take it and sort of figure the market out. Now we're seeing price declines. The predictions are 15 to 20%, even greater price declines in some markets that had very high appreciation. So when you go to the top, January 2022, double-digit home price appreciation being talked about by Zillow and, other iBuyers and, CoreLogic and whatever. Well, now we've got the Wall Street people, said Fitch, Moody's, and Goldman going, we're going to see, double-digit, declines and depreciation, maybe more in some areas. So for me, it's a big 180 degrees for about 8 or 9 months now. That's pretty amazing to see how fast that's actually changed. So interesting enough, when you actually go look at some of these things here, it does make a difference for us. But there's still little or no talk of what? Delinquency. So when all these people talk about inventory, interest rates, whatever, we don't hear, we still have delinquent mortgages. We still have people in forbearance, and they're coming out of forbearance, and they're trying to figure stuff out. We have an increasing number of foreclosures. So none of the discussion has any input, or these things don't go into any of the housing discussion we see right now. So of course I wonder, I just don't know why. So if we're talking certain double digit declines, etc., and you got a group like say Goldman, they're saying okay, we see a flat 2023, and then maybe 2024 and 2025 will sort of come out of it again. That's possible, but you know what? Why isn't anybody considering the foreclosures? It's that forgotten value or that forgotten number that's again is nebulous. Is just I don't know what the word I'm looking for, but it just seems to be a concerted effort to not look down that pathway, not look at this other shadow inventory, this huge potential volume of distressed properties that are going to be a lot cheaper priced. Now, basically, as I always like to show this is my proof positive that there is volume out there and we don't talk about it. Again, this is a press release coming from it looks like the White House. So that's the number one government elected official in the country here, and this was back in February 2021. This came out at a time where we were in the eviction and foreclosure moratorium, and I think it was expiring at the end of March, and they extended it for another 3 months. So the discussion point is what? This is a press release saying the pandemic has triggered a housing affordability crisis. Again. Affordability crisis to me is bubble. Again, they don't like the word bubble. All right, so it's affordability crisis, right? Basically 1 in 5 renters is behind on rent, and just over 10 million homeowners are behind on mortgage payments. So that squeaked out. That was not picked up by the media. That was downplayed. So I, of course, you see my comment there, like this. Surely this has to be a misprint, but it was never corrected. All right. So my point being, with respect to all this correction talk, all this talk, that's great and wonderful. This is where it kicks it over the edge. So we have, we had the first stage. We have a slowdown. Now we're having price declines. Well, what's the third stage? The third stage is crash. The third stage is, I don't want to keep saying the word manifestation, but these foreclosures and delinquencies and these forbearance programs, Andy, and all this, we'll call it pent up, volume of distressed properties that aren't going to fetch top dollar, that are financially and probably physically distressed, are going to be available, and they're going to be hitting the market, or investors are going to be buying them and changing the market with the lower price points. So you see, that's where that will put us over the edge. As I said, not one thing, but a combination of many, all in succession. So that's the point I'm trying to make here, guys. So again, my secondary point is get into the game, right? FYI, looking for agents, looking to do a lot of cool things. The marketplace that we're doing here, which is kind of great. So please inquire if you want to be involved in some of the things that I do. Obviously, new program now called Foreclosure Fortunes, or we're launching it right now. So if you missed the short sale stuff, you want to get in this one, get it now because it's discounted before the masses come. I can tell you that based on what I saw in the last housing crisis, right, we're like the calm before the storm right now. Everything's plateaued, things are dropping. No one knows what to do, what's happening. You can see it in various aspects of the marketplace. Then suddenly it comes on in a big wave. All right. So this is what's going to happen. If you're sitting there on the sidelines, you're not going to participate. You're going to miss out on the opportunity. All right. And I can tell you there are people who go, well, I'm going to wait to buy a house when it's at rock bottom. Well, here's something for you. Okay. If that's your mindset, that's a bad mindset, because you don't know when it's rock bottom until rock bottom has already passed by. The reason being, real estate is after the fact with comparables, usually 2 or 3 months behind in the analysis, when we're going to find out we're at rock bottom. So don't let good deals pass you by because you're looking for a rock bottom. The good deals are down this way and good deals are down this way. You just got to find out where they are and know how to negotiate them, all right? So that's the scoop, guys. So once again, I appreciate the views, likes, comments. Please share the video with your family and friends. Subscribe to our subscriber, and look forward to speaking with you in a couple days. Thank you.